So let's talk about basic scanning for stocks. First of all, that we want to know what stocks to trade, you will need to have a filter for your basic scanning, and it's going to be pretty simple and easy, and it's not as complicated as other people are saying. There's pretty much all my criteria. Let's go over them one by one. So basically, you want to scan in the pre-market, and if you see a ticker that's running yesterday that ran 1,000%, it has a momentum of potentially dropping in the next day. Of course, you want to keep that in the tab. Once you keep the previous day potential trades in the tab, then all you have to do is do the pre-market scanning. You wake up anywhere between 8 to 8:30. Sometimes you want to wake up a little bit earlier if the market is hot. You will see when the market is being hot that there is 100% runner day by day, back to back. So that's where you want to get up early. But usually you want to get up around 8 a.m. Once you do your pre-market scanning, then you want to search for the volume that's over 100K. And the higher, of course, the better. But volume, if before the market open, the volume is less than 100K, then it's not really ideal. I would say the very minimum pre-market volume has to be 100K or plus. If it's around 8 a.m., 8:30 a.m., the volume is already 100K, then that's pretty sufficient. And you want to take a look at the yearly chart and to see if there's any resistance. And also, does it going to qualify potential gap up short in the future or later in the day? Then you want to judge by that to see if you want to borrow shares or not. So the third point is you want to search for a price that's between $2 to $20. Anywhere over $20, it's okay to trade. It depends on the market cap and the float. Right here, you do want to put a limit on the market cap. If the market cap exceed over 500 million, then you do not want that in your scanner. In average, just for your typical trades, on daily basis, without multi-day runners, your price cap is around $20. So 2 to 20 is very ideal. And if you don't want to put a price cap, but as long as it's over $2 in the pre-market, then it's pretty sufficient if it has the volume that's over 100K. Last point is it has to be over 20%. Now this is going to be a little bit tricky because a lot of people tends to see, hey, Steven, that this ticker is over 20% and it's only traded, 50,000 shares in the pre-market. That is not ideal. So 20%, over 20%. Other than that, it has to fit all of the criteria: volume over 100K, price over $2, and then it has to not be a reverse split. So when the ticker does a reverse split, they reduce their float size, then they increase their price. So basically, if a ticker is only 30 cents and a ticker has to fit the NASDAQ requirement that the ticker has to be over $1. So if the ticker is under $1, and they have to do a reverse split to reduce the flow and increase the stock price, that means that the stock is all of a sudden up a couple thousand%, but they're actually not up a couple thousand%. It's just showing on the scanner that's up a couple thousand%. So if a ticker did a reverse split, majority of the time you can see it because after ticker does a reverse split, there's very limited amount of volume. So not something like over 100K, 200K in the pre-market. So just keep that in mind that after reverse split, ticker goes up a couple thousand%, sometimes a couple 100%, but majority of the time they don't trade any volume at all. So for this type of scanner, reverse split does not count to scanning through the pre-market. And also you have buyouts. Buyouts is a company that's agreed to purchase this company in the stock market at a certain price. Let's say they want to buy out this company around $20. And the news came out, the stock is at 20. So when it's around high float, high market cap, after a certain buyout, and the stock will not likely to move at all. Probably the price fluctuation will be anywhere between 50 cents to $1 on $20 stock, no more than 5%. So buyout doesn't count, reverse split doesn't count. So keep that in mind. Those are not the stock you want to be scanning at because, first of all, reverse split, they do not produce any liquidities. So as soon as you go in, then it's hard to get out. buyout, they don't move at all. So it's pretty much wasting your time scanning through the pre-market. And as I mentioned, that buyout normally stay in a flat line pretty much all day long. Sometimes they trade this amount of volume, but it's not for us day traders are looking for large movement, which is has to be over 15 to 25%. So those are the basic scanning criterias for me, and I've been using them for 7 to 8 years. So nothing has changed. It's been pretty simple. So in your scanner, go to your filter and just put all the criteria in. Volume over 100K, price over 2 to 20. It has to be over 20%. So pretty simple.